Alistair, I'm reading out a quote on this next question. It's elaborate, but I think because it's out of the UK, certainly you'll be able to answer it quite eloquently. The quote says, "In an effort to shore up its domestic economy, the British government is considering adjustments to its national individual savings accounts, in brackets ISA. Under current regulations, the UK investors are allowed to contribute a maximum of £20,000 to an ISA, free of income and capital gains tax. However," there's always a however, "the government is now contemplating changes to this successful savings program." I'll quote again, the next line. "If this reduction goes ahead, savers may increasingly turn to gold to make up the difference. Physical gold in the form of legal tender coins like sovereigns, Britannias and the Queen Bee series provides a simple capital gains tax-free option with no limit and no reliance on corporate performance. For many, gold isn't just about chasing returns. Gold has seen a 43% increase in the last year. It's about preserving wealth outside the whims of government. Apparently, the British government want the savings to be reduced from £20,000 to £10,000, with the other £10,000 to be invested in the stock market. Do you believe, Alistair, the public will go to physical gold or the stock market in their investments?"
Well, they may go for the stock markets to a limited degree. I think that is certainly possible. This is a debate which is continuing and is not over. The problem is that the building societies who basically provide the mortgages, residential mortgages in this country, rely on savings from ISAs to fund their loans to mortgagees. So we're not clear how this is going to run. As to whether a cut in the level of ISA contributions will encourage people to buy gold coins, which are capital gains tax-free. I mean, we're talking about coins of the realm, which are legal tender. I think that depends more on investors' sentiment as to whether they think gold is a good investment, if you like. I think it's a little too early to say that's the case. So this is not an emphasis I would put on this switch. From what I see in terms of, my subscribers and talking around and just getting the feel for the market as a whole, I think it's very, very early days for the wider public to invest in gold. I mean, obviously there are quite a few, and you will, if you talk to the coin dealers, they are seeing some sort of pickup in demand. But this is not yet a bandwagon, which I think is all that remarkable. The other problem, I think, is that for investors looking at gold, at the moment, I think the feeling is that the gold price has gone too high, and why should we buy something which we weren't prepared to buy at half the current price? So you can see the sentiment is very much like that. Now, we do have a problem here insofar as the rest of the world might take the view, well, if gold has run away, then perhaps we should buy some silver, which hasn't yet run away and actually is looking like it's, a very good alternative. But in the UK, there is a 20% VAT tax on the acquisition of silver bar and coin. So you can do that, and as long as you don't take possession, in other words, you can buy silver through, one of the dealers, and as long as they vault it for you and not deliver it, then it is free of VAT. But you begin to think, well, should we be doing this? The emphasis I would put on it, more likely, is I think in the next 6 months or so, there will be increasing interest in mining opportunities. And I think that's the way in which investors, if you like, forced to reduce their cash ISAs and encouraged to invest in British industry or whatever, or the stock market, they, I think, will go down that route, and they will probably begin to pick up mining shares. We've got some very, very big corporations here. I mean, we've got, you listed in London, you've got RTZ, you've got Antofagasta, which is a big Chilean copper miner, and so on, and various others. So there are opportunities to benefit, if you like, from the rising price of metals, rising prices measured in sterling anyway. And I think that the objective of encouraging people to invest in stocks and shares isn't going to be so successful as perhaps the Chancellor or the Treasury might hope in their negotiations with the banks and other parties who are interested in this issue.
Yes, I mean, in Australia, we have certain laws and obligations, but what Darren and I see in our own office is that in the last 1 to 2 years, we have been inundated, our girls, our staff have been inundated with people coming in to buying up to a certain limit of gold and silver because they see it practical. There's little tax to be paid. And of course, you've got the appreciation of the gold price, and you and I know it's the dollar going down, but the appreciation of the gold price. So what we have seen in our situation as a bullion dealer is a lot of people buying up to a certain level. So interesting point. Be interesting to follow this one through.